Hi there, welcome back to Family Fire Mission. I'm Jaden and this is the March 2026 Monthly Income SITREP. Family Fire Mission documents how a single income military family is building a second sustainable income through disciplined dividend and income investing. The objective is simple: replace earned income with reliable cash flow methodically and transparently. A quick disclaimer before we begin: this video is for entertainment and educational purposes only and reflects our personal experiences. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any security. So jumping right in here, we remain in the launch phase here in the month of March with 9 active income engines, which I'll get to 9 instead of 8, which was what we had last month. We have the active reinvestment engines being QDTE, XDTE, QQQI, and SPY-I. That's QDTE and QQQI based off the NASDAQ index, and XDTE and SPY-I based off of the S&P 500. Our portfolio yield on cost is 20.79%, and our monthly income for the month of March was $302.71, which gives us an income remaining to our $3,500 goal of $3,197.29. And our income goal completion is 8.65%. Now, our 3-month average income growth is still negative at negative $22.40, which means that mathematically we will never reach our goal. However, the income growth from last month to this month, which takes out the outlier months of December and January where we had very high income from QDTE and XDTE, our income growth from last month to this month was $24.77, which is just under 10% of the 10% growth rather. The end of month gross portfolio value was $17,453, which is down $840 from last month. From the overall market volatility right now, portfolio value does remain a secondary metric relative to the income and that income growth. So looking at the cash flow, so total monthly income, as I said, was $302.71. We reinvested that entire amount really to pay down the margin, and then we have spent $0. None of that income was used for any purchases or paying any bills. Our debt for the portfolio is $2,269, which is approximately 13% of the overall portfolio value. Now, looking over at our engine status here, you see our top 4 active reinvestment engines are now re-ranked, so they're now our top 4 here. Our highest income producing asset was Top W, which used to be known as WPay. That changed a couple weeks ago. That fund paid me $128.45. Then we have Blocks in second here at $75.14. YMAX in third at $47.57. And then a kind of surprising VTI here at $23.64. VTI being the primary ETF in my growth category, paid out their quarterly dividend at $23.64. So as I said, we had 9 active engines. That new one is SPMO. So SPMO, I started tracking it back in October, and I placed an order in December, a limit good to cancel order that was 10% less than what SPMO was at the time. The recent market volatility triggered that limit order, and so I bought 4 shares on margin, which brought the margin from 10% back up to the 13% that we see here. Our milestones here, though, we can see we're past all of our level 1s through $250. We have just skirted past the $300 mark here for this month, and now we're looking at trying to get into that $350 next month. If we extrapolate from our month-over-month income growth of $24.77, we'd be approximately halfway from 300 to 350, about 326 or so next month. So we'll see if we can break through that 350 barrier next month. And then moving on to our portfolio performance. So in the month of March alone, let's look at March alone. Relative to the other indices, we're down. So we are down 5.02% for the month. The Russell is down 5 on the dot. S&P 500 is down 4.98, and the NASDAQ is down 4.68. So we are right in line with the rest of the indices that we're tracking, which isn't too bad, considering we've had months before where we've been off by about 8% or so. It is encouraging to see that on the up days we are up relative to the indices. And then on the down days, we are generally more down. And that's partially because of Top W being a leveraged fund there. And then we will look at our weekly portfolio monitor here. And we can see that for the month of March, weekly, we were down 1.76, down 0.66%, down 1.62%, and then down 4.11%. That's just week over week right here. And then our cumulative return went from 10.65% at the end of February to negative 10.65%, to negative 17.74%. Graphs not looking great, but that's all right. We're going to keep going. As I said last month, this is an interesting time to be doing this and starting this portfolio, so we're going to keep going and see if we can push through this. Looking at the monthly portfolio monitor now, we have the net account value, so that is the gross account value minus the margin at $15,227, and that is $5,000 less than what I predicted we would be at. That prediction did have a percentage growth of the general market included in that, so the market has not gone up. And so obviously our account value is not going to be going up nearly as much as it otherwise would have. Dividends-wise, we're still in the red, but we're less in the red than we were last month. So last month at $277, we were down $33 from what I predicted we would be at. And this month at $302, we're down $22 from where I predicted we'd be at. So that's not bad. Our interest that we paid on margin was significantly less, $10.56 less than what I predicted it would be. So that's all right. Save $10. Gross account value, so this includes the margin. We're at $17,496. I'll have to go look and see why these numbers are different. Not off by too much though, which is still down $4,500 from where I predicted it would be, but similar to the net account value that we just went over, the prediction had a general market growth. So we've deposited an additional $375, bringing our total that we've deposited to $38.50 since we started this experiment, and our cost basis being $19,622. You can see our cost basis is higher than our gross account value, which means it's obviously in the red now. Margin equity percent, we're at 87, and then actual margin is just under $2,269, and so that brings our margin debt goal to we are $767 over what I predicted we would be at this time. I'm not really concerned about that margin amount though. It's still pretty healthy. Our income is still able to cover and bring down the margin pretty significantly each month. Now we're going to move into Snowball analytics here. So looking at our different categories, our cruise, launch, and terminal phase as we've identified them. Our cruise phase with QQQI, XDTE, QDTE, and eventually when I purchase more shares back into SPY-I, include SPY-I. Doing the best so far. QQQI is up 2.47%. XDTE is pretty much even, and QDTE is also pretty much even. VTI looking great from when I originally bought it a while back at plus 25%. SPMO is pretty much even, and I just bought that last week, so we'll see how that goes from here. Launch phase, this is where you get the high yield funds that will lose their price. Their price will go down, but their yield percentage is very high, and so there's a trade-off there. And with the exception of BTCI and blocks, which are down primarily because Bitcoin is down, YMAX and Top W are both very high yielding assets. And overall, though, we're trying to rebalance this. So you look at our goal allocation of 48%, 26 for launch, and 23 for terminal. We're at 13.5 out of that 48% for the cruise phase. Our launch phase is heavily overweight because of our initial allocation and the thought process that I had of we're going to quick start this to get high income early on and then use that income to buy into those cruise phase funds. And then terminal phase is the other half of our portfolio. Looking down here, we can see our monthly dividends received coming in. I'm not sure why this hasn't, why this number is off, but here we have in the next 12 months estimate is going to be $3,393, monthly average being $282. So the goal is to beat that. You can see dividend growth. This will be interesting as we get to the latter half of the year, where I really started putting more money into the income producing funds. But you can see here December was very high, January was slightly higher than December, and now we're coming back to our normal. And then our goal here says that we should be able to do it in 5 years. By 2031, get to our $30,000 a year goal. And that concludes this month's SITREP. Nothing out of the norm will be done from what I can tell. We'll continue to add probably our same 375 next month, and then buy into the QDTE, XDTE, QQQI, and SPY-I funds. The next update will be the mid-month checkpoint. Yes, the mid-month checkpoint, somewhere around the 15th to the 17th of the month. And tune in for that. Again, this content is for educational purposes only and not financial advice. Until next time, I'll see you then.